What is up everybody, welcome back to another stock market video, and today I'm going to be talking about the current strategy that I use during market sell-offs, like the one we're currently in the last few weeks. This strategy is pretty much based off ARK Invest CEO Cathie Wood, and I'll be showing a recent video clip of her explaining exactly how the strategy works in its most basic form. Just a quick disclaimer, this is just my way of how I do it, and I'm new to stock investing. This is just my own strategy, and remember that I'm not a financial advisor. I'm just a guy from New Zealand trying to wing my way into making a lot of money from the stock market. So during this video, I'll show you bits of the interview, and then I'll go into my own portfolio and show you specific examples of how I try to execute the same strategy. Please hit like on the video as it really helps the channel out, and if you're interested in investing, hit subscribe. With that said, let's get on with the video. Just before we watch the video, we can see that in the last month the S&P 500 has been trending down, and it's tried to recover just recently. So it's down by about almost 4% at its lowest point. So having a look at the NASDAQ, we can see that that's also trending from the 1 month chart, and then we can see it's down by about 9% as it slowly tries to recover.
The stock market's been in looking at growth stock, technology stocks. They wanted me to ask you if we start seeing technology stocks sell off for like a couple of years or a year, do you switch strategies? What do you do in that scenario?
We will, in a sell-off, any sell-off, we will concentrate towards our highest conviction names. So during the coronavirus, for example, the crisis, we went down to 33 names in our flagship portfolio. Today we're up to 55. So what we will do in an extended correction is we will concentrate the portfolio once again to the top 30, 35 stocks, because those are the ones in which we have the highest conviction, and it has been that conviction has been growing over time.
Got it. Okay, that's good. And
so what she's saying there is that during times of corrections and downturns, what they will do is they will concentrate to their highest conviction stocks. So for me, I would be focusing back to my three main companies, as usually I have around about 20 stocks in total. So my three conviction stocks are Tesla, Palantir and NIO, and I'm holding a tiny amount of IPOE. So moving over to my Sharesies account, we can see that now I've only got 5 stocks, and my highest conviction ones out of these 5 is obviously Palantir and Tesla. So here's just proof that I follow Cathie Wood's strategy, is that you can see that I've been buying Palantir as it's gotten cheaper and Tesla, and I've also started to sell my other positions, which is Fiverr, Store Capital and Walgreens. As we can see lower down, I've also started buying Canadian Solar, as that's really cheap at the moment, but I've also gone and sold Nvidia and Teladoc. So the next part of the interview is Cathie Wood talking about how she buys during market volatility.
Mutual fund, you can't just close it down. It doesn't work like that.
The irony is all I'm doing is concentrating on investing. If you look at our trades every day, we are being so opportunistic out there during a volatile market. We trade around volatility. We are liquidity providers. When investors and speculators are selling our stocks, creaming them, our highest conviction stocks, we will be buying them. When they are hyperventilating about our stocks, we will be selling them. We will be taking profits because we know there will be another source of controversy. We'll get another bout of volatility, and we can trade around it.
So here what she's saying is that stocks naturally go up and down. She's prepared beforehand of her buy and sell price targets, meaning she already has set values for what she considers the price of Tesla to be cheap or expensive during any time of the market. The email that ARK Invest sends out is a very good example of her doing exactly that. See, I've highlighted here where she sold off, and we can see at this date, I looked it up already, and each stock is worth about $880, and she sold a total of $93,000 for that day, and that's a total value of $81.88 million. And if we fast forward a bit, we can see here that in February, as the price went down, here I've noted that it's $714 per share. On this day here, we can see a big massive buy order of buying those same shares back, but this time she bought a lot more shares because it is a lot cheaper. So she just bought 245,000 shares, and that cost her $175 million to buy. But remember that 90,000 shares she sold, she actually made right here, I worked out, is $15 million on those previous shares. So she was selling them high, but buying them low again, and at this stage she bought even more. So moving over to Hatch, this is just me trying to execute that strategy to the best that I can, but remember that I'm not trying to time the market so much, I'm just following the general strategy of how she's doing it, but I do dollar cost average. But let's just show you an example of what I do. So here's where I bought, which was I considered low, and my price target was $400 for a low price, and I bought 5 shares. And when it got high to $700, I sold 8 of my shares because the stock had jumped up by 75% then. So to me, that was already too high. Now, I did get FOMO because what actually happened was that the stock reached $900, but I didn't know this, and I did have some shares left over to sell, but I ended up holding on to them. So this was the levels here that I was okay to sell these shares. And as time went on, I then decided that I had some extra money, so then I started dollar cost averaging to get those shares back, and we can see here that the price slowly has fallen over back down to the $600 mark. So I will be trying to buy some more shares. So this has now come back to my buying levels, in which I'll start to dollar cost average back into Tesla, and the money that I got here, which was significantly more than the $400 I was buying at, I've now managed to put that into Palantir, my third stock. So that's the profits from those is now gone into that stock. So for my final thoughts, as you can see, I'm not really doing anything new or revolutionary. I don't have any special tricks or tips, and I'm still learning. However, I do a lot of research on successful investors and try to have a look at how they behave in their successful strategies, and then I try to change it and implement it to my way of investing. This is why I say you should invest in your own way and to think for yourself. The last thing you want to do is trust someone with your hard-earned money and lose it on strategies that you don't believe in. Also, in this investing game, you really have to get your mindset right, have a plan, and execute that plan to the best that you're comfortable with. In times of market corrections and major sell-offs, you need to be investing in your high conviction stocks, the ones that you've researched the most in and learnt about, and be prepared to let go of your lesser conviction stocks. And if you can't handle individual company stock investing, then I suggest going into ETFs and mutual funds, dollar cost averaging into those, as those generally return over a long period of time better than the bank term deposits. So just off the top of my head, with my own high conviction stocks, currently, as you know, I'm in the field of work of technology, so my main ones are in the EV sector. So my high conviction growth stocks are Tesla and NIO. And just recently, if you've seen some of my videos, I've now added Palantir into that, as I understand more and research into their company, in which I really like, and I do understand their ERP business models that they have for Foundry. I've easily watched, read and researched over 70 hours of Tesla and NIO to build these high convictions, and with Palantir I've probably done the same thing, but only over 30 hours, as I just recently knew. So I could be totally wrong, but at the end of the day, you have to pick a strategy that you believe in, and this is a strategy I believed in my short time of investing, which is less than 1 year. I've managed to double my money, so I'm pretty happy with the strategy. I'm happy to see how it goes on, and as I read and continue, these are my 3 high conviction stocks. As I say, when there's sell-offs, I'm going to be buying more of these, selling my old ones. If we then get into a bull run and as the price gets too expensive, I'll then be looking at other stocks to add. But in saying that, I've just got to be careful, because I know that since I've started investing in March 2020, I know that the market has been consistently going high and the stocks have been getting expensive in value. Well, that's enough for me today. Thank you for watching. As always, make sure you do your own due diligence in the stocks that you buy. If you have any questions, feel free to ask them, and if you want to look at my whole portfolio, just have a look at some of my older videos, because I share them openly with you. May the gains be with you, and I'll see you on the next one. Goodbye.